Hey investors, welcome back to Stoxpot, your go-to podcast to unpack what's happening around various stocks, industries, and economy. It's me, LEKSHMANmj, and today we are exploring an industry that quietly powers everything from your car tires to life-saving medical gloves. Yes, we're talking about India's rubber industry. Did you know that India is the third largest producer and second largest consumer of natural rubber globally? With a thriving domestic market and growing global demand, this sector has its own challenges and opportunities. So stick around as we unpack the past, present, and the future of India's rubber industry. Imagine a world without rubber. No tires for vehicles, no elastic bands, no waterproof shoes, and even no comfortable gloves. This versatile material is everywhere, yet more people don't realize how critical it is to daily life. In India, the rubber industry supports over 4 lakh jobs and contributes around 200 billion rupees annually to the economy. But what makes this industry tick? Why is India struggling to meet its own demand despite being a top producer? And how are climate change and global markets impacting this essential resource? Let's get started with the basics. The Indian rubber industry consists of about 6,000 units, including large-scale factories, medium-sized businesses, and thousands of small enterprises. Together, they produce 35,000 different types of rubber products, ranging from auto tires to conveyor belts and more. In terms of production, Kerala leads the pack, producing over 90% of India's natural rubber because of its favorable tropical climate and rich soil condition, which is perfect for rubber cultivation. However, there is a twist. Despite Kerala's dominance, other regions like the northeastern states and Maharashtra are stepping up the games. For instance, under the project Road, around 125,000 hectares of new rubber plantation have been established across northeast India and parts of West Bengal. This initiative aims to boost natural rubber production significantly by involving major players like Apollo, CEAT, JK, and MRF. So having said that, now let's see why does India import so much rubber? Here's where things get tricky. Even though India produces nearly 8.7 lakh tons of natural rubber annually, it consumes far more. That's around 14.16 lakh tons. To bridge this gap, India imports rubber. During April to September 2024 alone, India imported 318,000 tons of natural rubber while exporting just 1,700 tons. Imports increased due to high domestic demand and lower yields caused by unpredictable weather patterns. With that said, now let's see why does weather matter so much. Rubber trees need consistent rainfall and dry tapping days to produce latex efficiently. But extended monsoon in Kerala reduced tapping days and lowered latex output. Additionally, fungal diseases spread faster in wet conditions, which further cuts the production. These factors force companies to rely on imports. Now let's see how are prices affecting the market. Price volatility is another big challenge. In August 2024, natural rubber prices peaked to a 15-year high of 247 rupees per kg, which was previously 182 rupees per kg. On top of that, high custom duties on imported natural rubber made matters even more worse. For example, a 25% duty or 30 rupee per kg pushed costs even higher for companies relying on imports. This price surge hit tire makers hard since natural rubber account for a significant portion of their raw materials. Additionally, domestic prices soared by 40% during April to September 2024, squeezing their profit margins further. Meanwhile, synthetic rubber derived from petroleum also saw cost hikes tied to crude oil trends. Therefore, companies now face a tough negotiation with international clients due to mismatched domestic and global pricing. Sustainability is becoming a buzzword in the sector. Regulatory bodies and customers are pushing manufacturers to adopt eco-friendly practices. Advanced technologies like digital tools and automation could transform supply chains, but adoption remains low. In terms of Network Readiness Index, India ranks 60th out of 134 countries, lagging behind nations like China. To address these gaps, the government launched initiatives under the National Rubber Policy. Based on that, subsidies for rubber cultivation will increase by 23%. Farmers in the traditional areas will receive 40,000 per hectare for plantation assistance, while those in non-traditional zones get 2 lakhs rupees per hectare. Training programs and group processing centers aims to improve quality and standardization. Now looking ahead, the rubber industry faces both challenges and opportunities. Demand is projected to double by 2030, driven by sectors like automotive, healthcare, and construction. However, meeting this demand requires overcoming hurdles like climate change, labor shortages, and technological adoption. Project Inroad and similar effort hold promise for expanding cultivation beyond Kerala. In that way, the Konkan belt in Maharashtra might emerge as a key player due to its suitable climate. Meanwhile, advancements in recycled rubber and waste reduction could pave the way for sustainable growth. Tire manufacturers expect relief in the second half of FY25 as domestic and international price gaps stabilize. Also, revenue growth of 7 to 8% is also expected, supported by strong OEM and replacement demand. But rising costs mean margins will remain tight until productivity improves. So there you have it, the fascinating story of India's rubber industry. From its humble roots in Kerala's plantation to its modern day struggles and innovation, this sector continues to evolve. Whether you are a farmer or manufacturer or simply someone who is curious about everyday materials, understanding the rubber industry gives us a glimpse into the interconnectedness of this world. So thanks for tuning into Stoxpot. If you find this episode insightful, share this with your friends and make sure you follow to stay updated. Until next time, it's LEKSHMANmj signing off.